high-risk investment. Trading on margin carries a high level of risk and may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with trading and seek advice from an independent financial advisor if you have any doubts. Market opinions. Any opinions, news, research, analyses, prices, or other information contained on this video is provided as general market commentary and does not constitute investment advice. Master the Markets will not accept liability for any loss or damage, including without limitation to any loss of profit, which may arise directly or indirectly from use of or reliance on such information.
Hello traders, welcome to our live trading workshop webinar today. Just a quick one on our format. I was just taking a look on the DAX. So first thing we always look at is the potential trades that are actually happening for today. And on Thursdays when we do this on Wednesdays and Thursdays live stream. But on Thursdays, we do it along with Trade Guider. We have a lot of focus and we put in looking at price and volume, and especially through the Tom Williams lens. Okay, that's what we will be looking at. And Gavin Holmes is the CEO and director of Trade Guider, who I'm joined with today. Hi, Gavin.
Yeah, hi, Terry. Hi, everyone. Welcome to you all. Sorry, my camera's not working at the moment, but at least I can show my screen. Today, we're going to talk a little bit about how the markets are moved by manipulation, which of course they are. And we have a website which we developed some years ago now, and we'll talk about some of the stories that are in there today. But then we'll go to some of the live charts. I'm in some trades at the moment, so we can look at those, especially gold, very interesting, and the NASDAQ. The new software that we developed in TradingView is picked up and emailed me some alerts overnight. So we can talk about that, and then the SMI indicator overlaid with it just confirmed it. So it's I don't want to be a conspiracy theorist, please. That's not what I am. I talk about reality, and the reality is there's if you look at some of the videos that we've put together at marketmanipulation.org, which I urge you to go and look at. It's our website, and we've got videos on there that are, some of them taken from various websites, and all with permission. They're very, very interesting to see, and I want to say once we've done some analysis here, I want to play you a video if it'll work. They keep taking this video down, but it talks about how the markets can be manipulated, and we'll see if I can play that. It's a very interesting video. That there are several on there that I would urge you to go and look at, and it's market manipulation. I'm sure Glenn or Kyron will put that up there for you. So I'm going to go back to Tira here, because I think you've got some positions that we can see now. So we'll go back to you, Tira.
Yeah, I just had a position on the DAX over here. I'll just push it out on the Telegram channel, but the exact location what I'm really looking at, traders, I just did some analysis on this, and there's a bit of volume as well coming into the market on this, is that let me just take a look on the close. The exact price, I'll give the limit order on the Telegram. If you guys get it, 23866 is what we are looking at actually over here. 23866, okay, is what I'm looking at over here. I'll push that on Telegram. I'll explain in a minute what I'm actually doing. I know I was supposed to tell you guys the format. Just bear with me a little bit more. 23866, isn't it? So 23866 is where I'm going for. Okay, so you guys should have that. Bear with me a little bit on when I come back to you on the stop loss and all of that. Now, so the format for today, usually what we do is, traders, we look at some live trading positions, okay, and potential trade setting up, because me and Gavin, we always believe that the best way you learn is through live trading, okay, on the right side of the chart, as we always say. Now, the second thing is that we also then will be taking a look at a topic for today, and the topic that we have come up for today, that is on understanding market manipulation through the Tom Williams lens, okay? So what more better way to analyze that? So we'll look at that through the price and volume, and also Gavin will be sharing some of Tom Williams' insights as well, and stories that he has spent so many years with, the great master, in the volume spread analysis section. And the third thing is that we usually will give you an update of the events that are coming up, as well as also a Q&A session as well. What you all can do is, as you're going through the live stream or on the Zoom over here, if you've got any questions, just type into the chat box, and then we will answer that towards the end over here, okay? Right, so with that said, those of you joining in for the first time, if you're new and you're not sure who I am, so just a quick intro. I'm Tirunaupan here, founder of Master the Markets Interest Conference and the Traders Open Day. And we are joined in by Gavin here. Gavin already did mention that he's the CEO of Trade Guider over there in the volume spread analysis. And we've partnered up together because price and volume matches up so very well together. Now, before we take a look at a few more instruments, I was looking at gold as well, but DAX just popped up just now, and I didn't want to miss this. I'm just going to flick through gold very quickly. I'm sure you had a look at it as well, Gavin. But that is on the down already, isn't it? So we are not. Let me just quickly just check that on the ATR level. So that's 32. So that's already done that, hasn't it? I'll stick to here. I'll quickly go on to the Brent over here. Brent is another one. It's been a bit slow. That's the only thing. It did pick up speed yesterday, and I did miss this. I was talking about this on the live stream yesterday. We did take yesterday's trade on actually gold, where we missed the target just by a little bit, and then we got a small profit on the trading stop loss. You can catch that all on our live channel as well. Brent, I'll come and take a look at that very soon, okay? Now, let's go through this DAX trade at the moment and see what's the rationale behind it. So what we do is that we align all of this together, right, across all the time frames. So I have looked at that all just now. So you can see on this table here, right? So we can see that there is a downtrend phase 2, a downtrend phase 2 on the 4 hour, 1 hour is uptrend phase 1, 15 minutes uptrend phase 1 as well, okay? Now, in terms of the stretch perspective, I'll give you all some reference videos to take a look at a bit later. Now, in terms of the stretch perspective, I'm taking a look at the upper stretch over here, right? That's what we got. Latest upper range is what is taken out as well. I'll explain all this in a minute, just bear with me. And then after that, what I'll be taking a look at? Previous daily high and low, right, good. That's a good one. So let's take a look at that as well on the daily time frame. Has it taken out its previous daily high and low? Yes, it has, right? So it has done that as well. It's taken out its previous daily high. So I've got that in as well here. Okay, that one there. Has it done its range? I usually always look at that because I want that to help me push the range up of the bar towards its average range, okay? Push the price up. And then finally, then we look at volume, which is so powerful. It's the icing on the cake, right? So over here, in terms of range, let me quickly take a look. Yesterday's range was 285. 0.8 times 285. 228. Right, so 228 is what we are looking at. Now 228, how much range has it done today? It's done only 182, as I can see on the right hand side. That again was designed by our client as well. One more good news I've got for you guys as well. We got the stretch indicator finally coded onto TradingView. Thanks to our client once again. who has just come, just like you all, just watch us through live streams, come to our Traders Basecamp programs and LTM Advance and then so on. And then he was very inspired by this, and he immediately said, you know what, Tiro, I'll help you code that. And we got that on TradingView at the moment. It looks a bit something like this. Don't get carried away. I need to get the stop loss in for the DAX. Like that, right? So we got that in. So you can see those lines. I can do that on the 1 hour. I just double checked it yesterday. Very amazing turnaround. Anton did a good job. Nice shout out to Anton. Amazing turnaround on that one. So here is what I've got on the stretch indicator here. GBP/USD is another one, but I think it's done its range. So I will come back to the DAX. Okay, so we still got to put our stop loss in and our target. So let me do all of that now. So the first thing is, as I said, once I put all of this in, I can see it's a clear cut, right? So on the DAX over here, yeah. In terms of trend alignment, yes, 2 time frames on the down, but 2 time frames on the up. So why am I still taking this towards the long side? And the range is also not fulfilled, yes? So this one I need to just change that to previous daily high, okay? So, but you see, as I was explaining to one of my other clients as well just now, is that when you look at, there's 2 things to look at. One is trend alignment and another one is direction alignment, okay? So in trend alignment wise, you got 2 time frames up and 2 time frames on the downside. Now, on the other hand, direction alignment wise, everything is pointing to the upside, okay? So I got the direction bias towards the upside and also my stretch. So just because of that, I just don't jump into the trade. We professionals, we don't. And as you see later, Gavin will be very similar as well in terms of the principles. And the stretch line is taken out to the upside, range line upside, previous daily high upside. So all pointing to the up, tick, 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 tick. And then that's how I form my bias. Now, timing. Now, in terms of timing, then what I then look at, I've got the SMI and VSA over here. I wait for the confirmation bar. Now here, I usually can take it on the 15-minute or on the 1 hour. So right now, I got the signal on the 1 hour time frame. So I'll ride it on the 1 hour. So let's do this together. So usually we enter on the close of the bar, so which is 23866, okay, is what I've got. So at the moment over here, when I take a look at this, I've got it at, I was a bit off, I was a bit 13 points off. I calculated it, pre-calculated it before. But in terms of stop loss, so let's do that together. There's a big statistical backing around all of this. You'll start to see now. So you see 23, I'll do this slowly together with you guys. So 23866, I'll put it in the calculator here. Okay, and here as well. And then this one, the stop loss here, right? So 23866 ATR is about 59.20. Now, we have calculated it such that we've got, so let me just do this, okay? So 59, I had a pre-made one over here that I can take a look at. So let me just do this one here. So I've got the MAE numbers here, right? So here, I've got the MAE numbers. So this will quickly tell me this. So that is 103. So I can either do 103 points. I'll show you in a minute the MAE numbers, why I'm doing that. I can do either 103 or for the swing low or for the points of the DAX. So let me just bear with me on this one a bit. Let me just bring up the DAX over here. Right. Right, so here, so let me see on, put the DAX over here. And as that's populating up, it's good. Great, so here we got the DAX. And on the DAX, I'm taking a look on the 1 hour time frame, isn't it? So on the 1 hour time frame, I am taking a look at here. I'll just use MAE 1. So, and I'll take a look at, I think I've got it as well here, isn't it? So when we are taking a look on the 1 hour time frame here, 37 points, 9 points, I can see from here from the stats table that if I do it at, I'm looking at about 96, 98%. So I'll go for 100, right? So 100 is about 97.43%. So I'll go on to my table here, right? And I'll show you guys what I'm going to do. And then we'll do this all together so you can see this in real time, right? And that's the best way we all learn, right? So over here, so I put the DAX over here, right? Let me just pull this to the bottom here. Right, I guess you guys should see this right now. So on the DAX, we got, I'll fill out the ATR in a minute. I'll show that to you guys in a minute. So we got the 100 points here. Okay, so I'll do 100. Now, all the MAE tells me is, and this is how we trade a conviction, and people who have used it also have confirmed it as well, is that when I do at 100, that means when I do it at 100 points away from the close, right, I won't get stopped out 97.43% of the time. Now, that's when you trade with conviction. And yes, these are all numbers that are populated from so many years of the research pulling, but why should it reproduce in the future is, first is data validity, big data. And then the other thing is how you get the conviction is when you start to see it reproduce again and again in the market, okay? So in terms of that, so we got 100 point from there. So close minus the 100 points here. So I'll just put that here for now. So this one, we've got 97.43%, right? So 97.43%. Good. And then the ATR is usually about 1.75, what I've found. And all this, the SMI will do that for you. And because we have programmed it, and this work actually started back in the 1970s, very similar to Richard Wyckoff's time and also then Tom Williams' time as well. That's why when you look at it, it's so complementary. It's crazy when me and Gavin, we look at it together, how this all comes together. You know, there's definitely an intelligent orchestration behind all of this. So, and then when I put the volume together, everything will start to make sense, okay? Hopefully we'll get a retracement. Some of you haven't got into it yet. I think we might get it. 23866 to 3875. I don't know why it's not matching up. Hopefully they got it. Okay. So coming back into here. So I've got the 1.75 ATR. There you go. So 96.72% of the time. Okay. So that's what we got over here. 96.72% of the time. So I've got both of the MAE at the moment, isn't it not, traders? So what I now do is I will take a look at 1.75. So I got 100 points here, okay? And 1.75 is 103, okay? And then the final thing is I take a look at my swing low position. So my swing low position here is 113. So I use the smaller one of all of them. So that comes to 100, isn't it? So then the close, 23866 minus the 100, yeah? So 23766 is what it will come to, okay? So I'll do that. And then my take profit, I do the same thing once again. So on the take profit, so I will do either a 1 ATR, which is 59 points, or I've got it all programmed onto here as well, which is, let me do that now. On the OE, okay, that's good. We got a trigger on the Telegram as well. So here, I'll do the points. I'll do 25, the 25, and I'll do greater than or equal to. After that, I'll pass it on to Gavin once I've done this. And I got to mention the last part, the volume, right? And that's where the powerful part is, okay? When you combine all of this with volume. Let me just do this one more time. Sometimes this plays around. So I've got the, so usually is 1 ATR, so, but let's see how it goes. And then I've got that, I've got OE, I've got 50, I've got 50, and I've got P1 I can select. Those of you who want to get a P1, get in contact with us, client service at mastermarkets.net. And there we go, bingo. So what are we looking at? So we're looking at about 50 points. That's on the phase 1, isn't it? So if I do 25 and 25, that would be a bit more better. So let me do that. It's going to populate that. And 25 points on the 1 hour. It's a bit more frequent, but I'm not including the trading hours. So I'll go for 50 points over here. 50 points. So 50 points or 1 ATR, whichever is bigger. Okay, 50 points or 1 ATR, whichever is bigger. So 59 points I'll go for. So 23866 plus 59. Okay, 23866 plus 59, and that's 23925, isn't it? 23925, more or less. There we go. And what I will now do is I will transfer all of this onto the chart here. So we got 23866, which is the blue line, okay? And then we got the red one, which is 23766. And then I'll push this out on Telegram as well. 23766. Okay. And then after that, I've got the green line, which is my target, 23925. Okay. Right. So there we go. So we got that. So after this, so it's got to push up there and take out its previous high is what we are saying. Now, if there's another target, I believe that there is a bit more range for this to go. So maybe I might push it on a higher range number. We'll see how it goes. Now, in terms of another one, 0.8 times 285, we will keep an eye on this. So 0.8 times 295 is what we're looking for. I'll do this, 285, isn't it? 0.8 times 285, that's about 228, right? So 228 is a range that I'm looking for. So from the low of that, so 23757, 23757 plus this one here, 228, okay, is what I'm looking for. And we got 23985. That's towards the range of today, okay? That's what we are looking at, right? So 23985 is what I will see. And the other thing is what I can also look for, which is very similar to our previous daily level, right? Which is here, which is the high of that. The high of yesterday was 23850, wasn't it? 23850, which is much above that. That was here, sorry, yeah. That's gone past that. But that's for the range of today, okay? But for the small target, what we have placed, we'll place it over here at 23925. So I will carry on and put that into there. In terms of volume, now, that's where the icing in the cake. It'll be much more clearer if I look on the trading view chart. So over here, you can see that when this spike happened is when I then saw it and I rushed into getting into the position, is that if you see over here, it's all shooting above the third moving average, right? As it was coming down, the strength here, strength into the selling, right? A little bit more diminishing towards the selling. Selling is saying that it's not towards the selling, but look at that when it came into the buying side of things. Now, again, we don't get fooled around just by looking at volume to enter into position. We look at all the rest of the background before, right? So we look at all the direction alignment, trend alignment, stretch, the range. Then we look at the range lines. We put all that together to formulate our bias. And then we want to see if there's fuel to back that move towards our direction that we want to go. And that's what we are using the volume towards here. Now, the final best one to give the confirmation on this buyer bar that the strength is still towards the upside is exactly what it's doing. So it will test that area around this big big green bar here on this testing, on this buyer bar where the volume came. So don't get fooled by the color of this bar. So all they're doing is testing that region and seeing, and smart money will be testing and seeing that and accumulating further before they accumulate fully finish and before they take it off as well. Okay, that's my full analysis over here. As I'll pass it on to Gavin to give his ideas and thoughts on this. I would say it's on the similar principles as well on the volume, because you've been doing this so many times together. Gavin, over to you, man.
Yeah, thanks, Terry. Yeah, hi everyone, welcome. I know we're broadcasting this on YouTube, so there's a lot of people there as well. I'll take the screen if I may.
Yeah, go for it.
And so the subject of today's session was obviously about market manipulation. So what I'm going to show you is our website, and this is one of the videos that are on there. It's probably 10 minutes long. It's not long. It's public. But it's a brilliant video, in my opinion, and it actually kicked off what we do at Trade Guided many years ago. We found this in 2005. And I'm going to play this to you, and I'm going to show you some actual charts where I can see that news affects everything in the markets. Well, it always has done, but this is actually fascinating. So let's see if we can play this and see if you can hear it. Let's try it.
Welcome to Wall Street Confidential. I'm Aaron Task, joined again by Jim Cramer. Jim, welcome.
Good to see you.
Thanks for being here. There's a lot of economic data out today, but I want to talk about something else first. Again, today we have the misdirection from the futures. The futures up market, and as of right now, stocks are down again. Is this just because it's the holiday period that we're seeing this?
You know, a lot of times when I was short at my hedge fund and I was positioned short, meaning I needed it down, I would create a level of activity beforehand that could drive the futures. It doesn't take much money. Similarly, if I were long and I would want to make things a little bit rosy, I would go in and take a bunch of stocks and make sure that they're higher, and maybe commit 5 million in capital to do it, and I could affect it. What you're seeing now is it probably is bigger market now. Maybe you need 10 million in capital to knock this stuff down, but it's a fun game and it's a lucrative game, and you can move it up and then fade it. That's often creates a very negative feel. So let's say you take a longer term view intraday, and you say, listen, I'm going to boost the futures, and then when the real sellers come in, real market comes in, they're going to knock it down. That's going to create a negative view. That's a strategy very worth doing when you're valued on a day-to-day basis. And I would encourage anyone who's in the hedge fund game to do it, because it's legal,
Right.
and it is a very quick way to make money and very satisfying.
Okay.
Well, by the way, no one else in the world would ever admit that, but I could care.
That's right. And you can say that here.
Again, I'm not going to say it on TV.
Well, on a related note, there's so many more hedge funds today than when you were
Right.
managing your hedge fund.
Right.
Do you think that does that exacerbate the moves, or does it make it
Well,
tougher?
you know,
because there's-
the hedge funds are positioned long short, okay, not just long like mutual funds. So it's really vital these next 6 days, because of your payday. You've really got to control the market. You can't let it lift. When you get a research in motion, it's really important to use a lot of your firepower to knock that down, because it's the fulcrum of the market today. So let's say I were short. What I would do is I would hit a lot of guys with RIM. Now, you can't foment. That's a violation of
Ferment?
Yeah, you can't foment. You
Foment.
can't create yourself an impression that a stock's down. But you do it anyway because the SEC doesn't
Right.
understand it. So I mean, that's the only sense that I would say this is illegal. But a hedge fund that's not up a lot really has to do a lot now to save itself. So this is different from what I was talking about at the beginning, where I would be buying the Qs and stuff.
Right.
This is actually just lately illegal. But when you have 6 days and your company may be in doubt because you're down, I think it's really important to foment. If I were one of these guys, foment an impression that research in motion isn't any good, because research in motion is the key today. So you would hit this guy and that guy when you would see an offering. When you see a guy who's bidding, you'd wipe out that guy very quickly. And what I used to do was called, if I wanted to go higher, I would take and bid, take and bid, take and bid. And if I wanted to go lower, I'd hit an offer, hit an offer, hit an offer. And I could get a stock like RIM for maybe, that might cost me 15, 20 million, Annie, to knock RIM down. But it would be fabulous because it would beleaguer all the moron longs who are also keying on research and motion. So
There's a lot of
we're
that going
seeing,
on today with
yeah,
RIM.
we're seeing that. That's, again, when your company's in a survival mode, it's really important to defeat research in motion and get the Pisanis of the world and the people talking about it as if there's something wrong with RIM. Then you would call the journal and you get the Bozo report on research in motion and you would feed that there's a Palm's got a killer it's going to give away. These are all the things you must do on a day like today. And if you're not doing it, maybe you shouldn't be in the game.
Okay. Another stock that a lot of people are focused on right now seems to be Apple.
Yeah,
You
Apple's
mentioned-
very important to spread the rumor that that both Verizon and AT&T have decided they don't like the phone.
Right.
That's a very easy one to do because it's also you want to spread the rumor that it's not going to be ready for Macworld. And this is very easy because the people who write about Apple want that story. And you can claim that it's credible because you spoke to someone at Apple because Apple isn't and it doesn't.
Right, they're
issue
not
any
going to
statements.
comment. They're not going
Right,
to.
so it's really an ideal short. And I would, again, if I were short Apple, I would be working very hard today to get that. And the way you would do that is you pick up the phone, you call 6 trading desk, and you say, listen, I just got off the phone with my contact at Verizon. And he has already said, listen, we're a Lucky G house. We're a Samsung house. We're a Motorola house. There's no room for Apple. They want too much. We're not going to let them in. We're not going to let them do what they did to music. And, I think that's a very effective way to keep a stock down.
Right.
I might also, by the way, because the stock at 84, 85, a little bit of capital, you go buy some January 80 puts that makes it look like there's going to be something going on. So maybe you give Morgan an order to buy 1,000 Jan 80 puts, then you go position limit with you use a hat firm that doesn't know what the heck it's doing. Maybe you go to UBS for puts. And you just kind of create an image that there's going to be news next week, and that's going to frighten everybody. And they all go out and say large put buyer UBS, and then they call Pisani again. You have to use those guys and say, listen, I see a big buyer puts, and I'm told that it's SAC. You would do that too. And these are all what's really going on under the market that you don't see.
Right, and nobody else talks about it.
Right,
Except
but
you.
what's important when you're in that hedge fund mode is to not do anything remotely truthful. Because the truth is so against your view
Right.
that it's important to create a new truth to develop a fiction. And the fiction is developed by almost anybody who's down like 2% to up 6% here. You can't take any chances. You can't have the market up any more than it is if you're up 6. Because starting Jan 2, you'll have all your money come out. So
Right.
what would you do if you're in that situation and you feel like you're desperate? Is that you would do these actions?
So you're talking about the mechanics of the market.
These are much more important than the fundamentals.
Oh, well, okay. Well, but in terms of the fundamentals, you've been writing about how you
It's
think.
about the fundamentals. Research and motion just blew out the court.
Right.
But look what people can do. I mean, that's a fabulous thing. The great thing about the market is it has nothing to do with the actual stocks.
Right.
Now, look, over maybe 2 weeks from now, the buyers will come to their senses and realize that everything that they heard was a lie. But then again, Fannie Mae lied about their earnings for $6 billion. So,
Right, and
there's
Bristol
just,
Myers
there's
lied,
just fiction
yeah.
and fiction and fiction. And I think it's important for people to recognize that the way that the market really works is to have that nexus of hit the brokerage houses with a series of orders that can push it down, then leak it to the press, and then get it on CNBC. That's also very important. And then you have a kind of a vicious cycle down.
Right.
And it's a pretty good game. And it can be played. You can pay for a % or two.
Right, and then do you get long before Macworld and the expectation that the iPhone is going to be good? Right, and then you go back,
You
flip to the
got
long
to
side.
use the other side.
Interesting.
And there's a case where I would say the January 80 puts can be justified because after I've knocked the stock down to 80, I can buy a lot of common. And then you play right into Macworld where they'll probably introduce the phone and Verizon's going to take it.
Yeah. Well, maybe the fundamentals don't matter, but let's talk about the Fed a little bit.
What Wall Street Confidential
Yes.
is not giving you the party line. Oh, here's the
Right.
party line, by the way. I spoke to Apple. The phone. I hear the phones are good, and Verizon might take it. And as a matter of fact, the research in motion sell.
So you get a flavour there. I'm not going to play the whole thing because I want to go to the charts right now. There's a lot going on. But when Tom Williams and I first met, he discussed with me that the markets are manipulated. Now, in Trading in the Shadow of the Smart Money, my first book, and I've published 4, I discuss exactly that. Now, is that a conspiracy theory? Well, I've met Jim Cramer in New York when I was out there, and I've worked with TheStreet.com, and we did an email blast to their database, and very successful. The truth is always in the chart. And what Tiru and everyone at Master the Markets has done with the smart money indicator, and what we've done, is focus on the chart, not the rumor. Now, the rumor is always what creates human emotion. If you look at Donald Trump and Elon Musk at the moment, they were best buddies 6 months ago. They were like high-fiving it and doing really, and now apparently not. So, and it affects the markets. So we must trust the chart. And that's exactly what we're going to talk about today. So I'm going to go to a chart. And what we'll do is we'll go to gold, first of all. Okay. So I'm going to show you, and you should all be able to see this. It's the chart of gold.
Yeah, we can see again.
Yeah, good. Okay, lots of news about gold. This is a very different time frame that I've used, and it's been given to me by Charles Atmore, our CTO. He said, look at a 130-minute chart. And I said, well, I've never looked at that time frame. He said, it's very important. Now, Tiru at the beginning, and I've kept this chart really clean. I haven't put all the SMI indicators or lots of the new indicators in here that we're adding. I've kept it really straightforward because I just want to talk about volume and manipulation. So first of all, what happens when rumors are spread about, and it happens a lot, where human beings are and traders and investors are influenced by what they hear. What we must recognize is how important volume is. And here at the bottom, we've got massive volume and we've got a signal, PB. Okay, that's in the TradingView platform. Now, there's a big promotion that TradingView are doing tomorrow, 80% off their subscriptions, whether it's yearly, monthly, you have to go to their website, but we'll do something along the same lines. But we've got a clear signal here that buyers are stepping in on the down move, because over that period of time, which would have been probably longer than 24 hours, but we've got a down move and then suddenly what we call a spring, which is where the market marks down, the software sees it, sends me an email and says there's buyers. Now, how do we know that's buying? How can we possibly know that? Well, look at just use some basic education here. If that was all sellers on that down bar, we've got a green indicator, not a red one, because we're looking at three universal laws: supply and demand, cause and effect, effort versus result. And what's interesting here is I can see at the bottom of the screen, our system on this particular time frame is showing the down move, but it's also showing that the real strength is in the bigger move, which is what you'll see at the bottom there. So now we wait. So let's go live. What happens? Okay, so we start to accumulate. Okay, now, do you get red signals in the downtrend? Of course you do. But if you see that, you're not going to want to short. You're going to want to wait. And this is what I've learned. You're paid to be patient, but most people aren't. And then we accumulate. It's already in the background. Everything's in the background. And it keeps accumulating because of that massive buying that you saw. And as we go up, the trending system is all in alignment. and then you get more buying. See this? It's just come in. Okay, so we've got now what the system does. This is the Trade to Win Pro version, the elite version. It's picked up a massive volume bar closing in the middle with the next bar trying to push higher. And it's marked at the bottom and the top of the bar. Now, why has it done that? Very straightforward. As soon as this price bar penetrates the top, it sends me an email. If it goes down, meaning they're buying more down here on this news, how do I know there's news? You just click on that in TradingView. Gold lower, okay, as gold's not that lower. It's actually had a down move, but the news does affect the price. But if we say gold is lower here, it's gone up. So that can't be right, can it? Because the markets are rigged. I know which big banks are positioning themselves in gold. And so now I'm using delayed data, by the way, just be clear on this, because I've just upgraded my account. So, but it doesn't matter on a 130-minute chart, it doesn't matter. But if you go to a smaller time frame, we would have to go to the live data chart, which has just been upgraded. So, but what we can see here is gold is lower according to the earnings reports and the reports, but it's actually going up. And so when we see this type of activity, we must ask ourselves, you know, is that volume important? And in Smart Money Indicator, SMI, from Master the Markets and Trade Guider, that's exactly what we focus on. So we're not focused on news, although I've just talked about market manipulation and we've talked about that. We know, I know, and I'm 100% certain that markets do get manipulated because human beings will take an edge where they can, and I wouldn't blame them. And there's always an edge to be had if you can create rumour, like Jim Cramer talked about there, or you can create conjecture. So this is potentially a very good long trade in gold, but it's not set up yet. So when it breaks either of these lines, the Trade to Win program sends an email and says it's ready to go. Now you might say, why 130-minute time frame? That's it, 130. Okay, that's an hour and a half. Depends what you want to do. Do you want to scalp the market? Then you change the time frame. You can change the time frame very easily here. It's not difficult to do. We're using TradingView. We've got a promotion tomorrow. I believe it's like 80% off their program, something like that. It's very good, and we'll do a promotion as well at the same time. But then I look at the opposite side of the coin, and I just got a trade alert that came in, and they come in into my email account and also on my smartphone. The reason we're working closely with TradingView at the moment is this program works with multiple platforms and multiple instruments. So I've got it on my iPhone, my Samsung, my iPad. It looks the same. And I can place orders from any of those things, which I couldn't do with NinjaTrader because it's an executable file. So I have to be by my laptop or my, by my computer. If I was out shopping and suddenly an alert came in, I'd see it. I'd have to ring the broker and get the order placed verbally. So this has changed the game. Now, I know, I'm pretty certain I'm right on this, that other companies are following suit now. If you look at the NASDAQ, we got alerts based on this. Now, everything had turned green in these timeframes, all right? The 130, which is the one I've just showed you, okay? And then you've got the daily, we've got the weekly. Now, everything's green under here, which is basically based on volume. And we got something called an SO indicator, which immediately triggers an alert if you've got the program and you've got the email system set up. And it's called a shakeout. Now, I liken this to the Wyckoff method, which is a bit like market manipulation, where the market's marked down, probably on some bad news. It could, and there's plenty of it, plenty of news around, and that drives price. And they mark the price down, but then we have to look at how the market reacts to that. And look what happens. We get a test in a rising market, a new indicator. Now this one is programmed in here to the TradingView platform. And then we look at how the market reacts, and it has to react positively. So it goes down into the shakeout area and we get something called PB, which is buying. Okay, then it collapses. That's good because it means they're trying to reaccumulate at lower pricing. And then we start to reaccumulate, and it takes time. You've got to be patient. And that's exactly what they do. Okay, it comes down and then it's bouncing around. I think Tiru calls it the dance of the market here. It comes back into that area. So you've got to have a good stop loss in place. Okay, there's your test, secondary test. And now we get to the right edge of the chart where the shakeout happens, and that's what I want to show you. So you've got exactly what they do, the shakeout, and look at where it's going, up at the high. You've got to time it right, and that's the bit that I'm going to teach you, and Tiru will teach you with our indicators, because we can see that the shakeout followed by the test, which I talked about in the YouTube video the other day, yesterday in fact, is in play. Okay, so it does accumulate, and then once you catch the move, you've got to stay with it. And once you do, you look at our trending system, there's more buying, there's another test, and now it's marked out to the right, which you can see, and it's making another high. So there's the buying, there's the test. There is, if you didn't take the trade down there because you didn't want to take the risk of that market fluctuation there, which I would fully understand, you would now have a very good trade, because here it's broken the top of the bar and there's the test of the top of the bar. And I haven't put SMI on here for the moment. I've kept it straightforward. But if you look at the SMI indicators, which I've got on my other screen, they confirm all of it. And everything aligns. And that, I mean, this is a 130-minute chart. That would be an entry. And then where would you put your stop? Well, it depends how size of, this is a great question. What size of account do you have? If you've got a $1,000 account, you shouldn't even be trading this market. But if you've got a $1 million account, then you could put a decent stop in and say, I'll take the risk, because that's what this is all about. It's risk versus reward. So buying happens on down moves. It doesn't happen on up moves. Professional money, they buy low. They don't buy high. All right? That's really important. Secondly, they will test the market to see if there's supply in this area, meaning more sellers. It comes back down. Volume is pretty average, but it closes in the middle. But the market springs. It's a 2-bar reversal. And that's how this works. And so what we've developed with Master the Markets and Trade Guider and Trade to Win is a system that gives you an alert, and that is where the buyers are. Now, let me go back to gold quickly, if I may, because that's just come up with an alert, and then I'll hand over to Tiru. Yep, Exactly what I thought. So now you've got the PB bar, the volume's enormous. There's some news. So go to a small time frame. I would go to a 5 minute here. And there's a test. Exactly what I'd look for. Excuse me. So mark down, mark down, mark down, a change in behavior, a test, and then here, and I'll just focus on this for a second before I hand over to Tiru. If that turns solid green, which the software will do, we'll see higher prices almost immediately. And I've just had an email alert on this. And it's changing behavior. So the market's had a markdown with that high volume, okay? And then it's changed behavior, which is what the late David Weiss wrote about in his book, Trades About to Happen. Okay, so we've got 1 minute to go. And then I'll hand back to Tiru and we can wrap it up for you all. But this is a great chart because it shows all the principles. And in fact, we were talking about market manipulation. Well, the news that came out was pretty negative and the market fell, but now look at it. And then when this bar closes, if that test was successful, the next bar had to close up. So if that test is successful, the next bar will close up. But I've already got the alert. And I will say that this is going to, according to my point and figure charts here, 3352 is what I'm looking at. 3352. Now we've got it. Okay. So that's now changed color. You see it's solid like it was there. So it's going to 3352. Okay. And that's almost, you know, I'd say 98% accurate. It should have another test though, because there's still a lot of volume in this bar. But because it's in the middle of the bar, I would say it'll start to increase. Now, Tiru and I have discussed this. I said, well, we do this live and we put ourselves on the line. If you're going to trade, you've got to take risk. And Tiru, I'm sure, will cover this in a minute, but nothing is guaranteed in the markets, right? If I say it's going to 3352, I might be wrong, in which case I'd have a stop loss. But if I'm right, and I'm right quite a lot of the times, then you look for the indicators. And there's one, and there's two. And then you can go to a smaller time frame if you want. You could even go to get in on a 1 minute time frame, okay? And at the moment, it's because of this PB bar here, it's testing the bottom of that bar here. That's what's causing this move. If you want to go and change the time frames up here in the software, you can do it. All right. But what it's trying to do is test this volume that's on that bar. And you'll see, give it a minute, 3352. Now, when everything at the bottom aligns, the ones that I've got the bigger time frames up at the bottom, but that's not what I'm actually looking at here. I'm showing the accumulation and the testing. And that's exactly what we look for. But it takes time, and if you're in a webinar and you've got an hour, you might have to wait 3 hours for that to happen, which is frustrating because some people say, oh, it should happen immediately. It doesn't work that way. Markets are like, well, especially the day before Thanksgiving, much slower. But We have the evidence, and I'm an ex-police officer. You have the buying. You have the testing of the buying. Okay, and you've had to move up even on while we've been on air. And I suspect we'll probably see the same thing. So with that said, I'll hand back to Tiru. I'll keep an eye on this. I'll be here. We don't want to make this a really long webinar. We just want to touch on this. But let's finish off from me with saying, are the markets manipulated? They are. And if you don't believe that to be true, then go to marketmanipulation.org. And I think Glenn and Kyron have put that link into the room. But it's very simple. It's marketmanipulation.org. And there's a resource center there where you can look at some of the videos. Now, this is not a conspiracy theory. It's called human nature, for want of a better word. If there's a way to make money, then people will take advantage of that. Does the chart tell the truth? Well, you're seeing it. Okay, it's being accumulated, tested at that level. Is there a way to get alerted to know when a 1 minute chart is going up? You're seeing it in the software right now. It works. And then the only thing that you need to do is make a decision on where you put your stop. Well, that is depending. I mean, I get asked it all the time. Where do I put my stop, Gavin? And I say, well, what size is your account, sir or madam? And there's no one answer. I'm sure Terry will touch on this in a minute. There's no one simple answer to it, because if someone's got a $20 million account, they could put a much bigger stop than someone who's trading a Forex account with $1,000. And if you try to advise someone where to put stop, which I don't, even in my mentorship courses, I say, well, look, I don't know the size of your account unless you tell me. You have to calculate it. But give you an example, what my rule is in the fund is you never risk more than 1.5% of the account in any one trade. And never, if you take more than one trade, 6% of the overall account. Never. So if you blew out the account completely, you got it completely wrong, and you risked 6% in the trades, then you'd still be trading with capital. You haven't blown the account up. And that's very, very important. With that said, I'm going to hand you back to Tiru, who'll wrap it up. Thank you all. We will be doing a promotion tomorrow.
Good news, Gavin. The DAX hit the target.
Yeah, okay. I'm going to hand over to you then. Yeah, I saw that. Yeah. Let me give you the screen.
Let me just share that over here. I think you guys should be able to see that on my screen here. Can you all see that? You can just type in yes to the chat box if you all can see my screen. And on the YouTube, thanks for that confirmation, Tom. You can see that hit it in real time, as what me and Gavin are explaining over here. So you can see DAX hit that green line, the order has hit the target, it's on the Telegram channel as well. Some reason, traders, you know, when I went to amend the position, I don't know why on the signal it went to close it. It should actually hit the target, or did it hit the target actually? Let me just check on the Telegram channel. Actually, what happened? It says trade closed. It shouldn't have closed actually. You should have hit the target, isn't it? 23925. Our target was at 23925. I think it did come out at the exit price, I guess. So that's great. So that is what it did. So you can see that on the account history over here as you go through. That's locked in over here at 268. What we need to improve on our side is just the entry and the position sizing is much more quickly, and that's why we need a bit more people on the team to work all this out and automate this a little bit. But we are working on it. I think people are getting very inspired by this, because I always tell Gavin that we are the only guys, to be honest, that trades on the very few people trade on the right side of the chart. I also have seen a lot of YouTube videos and everything, but there's very, very few people who do it on the right side of the chart. There's a lot of learning over here for you guys, plus over here on how we analyze the trade, on the entry, you know, the stop, the target, backed up with stats as well, using volume as well to back it all up. I gave the explanations on the DAX over here as well. And on top of that, I also use the position size calculator on the risk management side of things, how much to risk also, right? So there's a lot of things for you guys to take away from here and revisit. And now, where will this video actually be loaded up to? This will be on our YouTube channel. But before that, let me give you all the reference links. I'm getting some messages also on the YouTube channel as well. I'll take that in a minute. But you see, the first place I would say, those of you coming in for the first time, right? So I would say 7stepstoctp.com is the first place to look at this, okay? And once you've put in your details over here, you get the 7 videos being sent to your inbox, right? And then you can watch that at your own free time, okay? So all the details here, name, email, number, not robot, hit the green button, and then you'll get that sent into your inbox. And then you also will get then emails also added to our email list, and you will get all the updates on SMI and VSA events and all of that, right? Trade Guider and Master the Market events. The other thing also is our website. When you go to our website, when you go to the menu section here on the right-hand side here, and when you click on SMI and VSA over here, right? Then what you can do then, you can go onto this page here. The team will send out the links on the YouTube and Zoom chat. And you can go and take a look at this and see how you can get hold of the indicators. If you got any further questions, then you can also then email us as well. Now, for the other questions that you guys asked in terms of where will these videos be uploaded? So when we go live on Wednesday, the way to keep on track of whenever we go live is to hit the subscribe button. Not only that, traders, after you hit the subscribe button, the important thing is to click the all bell icon, okay? Now, when you do that, then you get notified every time we will go live or Gavin goes live, okay? That's on Master the Market channel, youtube.com/Master the Markets. Every Wednesday we go live on our channel. Then on the live section, so whenever you want to revisit any live video that we've done live stream, right? So under the live stream, it's all here. It's all stored on the YouTube here. Now on Thursdays when we go live on Trade Guider, youtube.com/Trade Guider, do the same thing. Click on subscribe, click on the all bell icon. After that, then if you look at the live section over here, then you will start to see, it's already being populated here on the live section. This is what we are live streaming at the moment, okay? And then you can revisit this material. I know a lot of you have told me when you come to the one-to-one sessions that, oh, these videos are so much good value. I need to go and revisit them about 5-6 times, okay? Because we cover everything, isn't it? At the end when you take the trade, right? So it's a lot of learning here to do. And of course, some of you have also said, you know what, but we want to get mentored by you one-to-one. That's the time when you learn the most, okay? So I totally agree. So you can definitely do that as well. And the final thing is I also want to do a shout out to Trade Nation too as well, okay? They are the ones who are helping us in collaboration to push out the Telegram signals, which you guys are also getting as well, okay? Right, traders, I guess that's that one here. And the last thing what I would say is we did cover quite a bit. We shot a bit above overtime as well. Good to see the regulars over here as well, quite a few of you on the Zoom and then the YouTube. Now, in terms of some questions coming in and events coming up as well, let me see some message. No stops or logical position size determines that you need to afford one contract. Yeah, Red Eagle is saying that. Yeah, that's totally fine. No stops or logical placements. You know, more than logical, I think you need also some stats backing of it, which we looked at with the MAE numbers over here that you saw over here on the DAX point. Over here, I've also put a larger target here as well, isn't it, traders, right? On the range, I think highly probably it will hit that as well on the DAX. We got on an earlier target, which is the 180R stats backed as well. And some people, sometimes when you've looked at so many things and you're a bit skeptical, you don't know, you might quickly say that when you look at this, you might say, oh, this is all from before, right? Okay, yes, you've got this data validation here. If I go to the settings, it's from 2010 onwards. So some people might say, oh, it's only from the past, isn't it, Thiru? Like over 15 years, of testing. But where you get the confidence, one is, okay, it's a large data sample, so there's a higher rate of probability of reproducing. But the second thing is, traders, when you get convinced this, when you start seeing it in real time, doing it as well, isn't it not? Yeah, that's when you start to get the confidence more and more. So that's what you all have to understand as well. So it's a two-part thing to this, okay? Not only just having the stats, but putting it together and seeing it in real time, reproducing. And it's not only me saying it, all of you clients were using it now and seeing it in real time, reproducing, you're coming and feedbacking to us. So sometimes if you want to progress forward, it's also about having that open-mindedness and taking it systematically and dissecting it down to see if it reproduces in real time, okay? So that's the way to look at it. We also showed you the stop placements as well, where we placed it and it never came to that stop, isn't it? But if you do remember, there was a red seller bar which came against us, but it never got to where our stop was, wasn't it not, traders? You remember that was happening over here. Yesterday when I took the gold as well, the same thing was happening later on in the evening. But once you got the stats backing a logical conviction, you can trade with conviction, okay? Not just blindly, illogically, but in a very logical, systematic manner, okay? I think enough of that said. Yeah.
Just quickly, I've just had an alert, and I'm long British pound 6B.
Oh right, okay. Let's take a look at that.
Yeah, it was a 10-minute. It's 10 minutes ago, but I took the trade. I didn't want to interrupt you, but I want you to have a look at the 6B, maybe on the 15-minute, 5-minute, whichever one you want to look at. You'll see why. And the SMI confirmed.
Pretty clear. You can immediately see the volume spike.
Yep.
Confirmed by SMI over there. Now, if you want a bit more conviction, then take a look at the trends along the different time frames. And I'm sure, Gavin, you already did that already.
Yeah.
Yeah, so we can quickly see on a 5-minute, it's on the up, 15 is on the up, 30-minute, even though it's on the down, but there's a direction alignment. And if I take a look on the daily, yeah, it's just bouncing up as well. So it depends on your target objectives. Also, I guess, Gavin, what people need to understand is that 1,001 strategies you can create, right, using these indicators. And it depends on which fits their personality.
Yeah, well, this yeah, absolutely correct. And interestingly enough, the British pound collapsed because the Chancellor started crying in Parliament. Right, that was enough to cause the pound to go down, and all of the media outlets said, "Oh, that's it. There's a big problem because Rachel Reeves was crying in Parliament." But it was nothing to do with politics at all. I'm pretty certain of that. And then we had a big collapse, and it's a shakeout. That's what it is. But the pound immediately rebounded today because Sir Keir Starmer came out, our Prime Minister came out and said, well, it was nothing to do with politics. And that's how rumour and conjecture and market manipulation works. If you put out a rumour and you've got some sort of influence like Elon Musk or Donald Trump, you can move markets, and it definitely works that way. Anyway, that's the British pound for you. Shakeout, test, rally, 3-minute chart. Brilliant.
Beautiful example, isn't it? I mean, what more better way to show it than in real-time charts, right? I mean, there's no other way, to be honest. And that's what we always like anyway, Gavin. We like to trade
do it live. Yeah.
right side of the chart, and all documented as well on Telegram channel, guys, on all the trades that we push out. So you can go and take a look at it. One of our clients went to go and populate all of this into a spreadsheet, what we've taken over the last 2-3 months, and came up and said, this is amazing. It's 70% reliability, you know, and the execution can be a bit better. But as I said, if we got more people on the team, that'd be great. And those of you want to learn it a bit more deeper, get in touch with us, okay? And there's a one-to-one session as well. So if you want to ask more in-depth questions to us as well, I know some of you have been joining us on the live trading webinars quite regularly. You can join us on the one-to-one sessions, okay? There is a link that has been put out there. Look at the calendar and then book it at your own free time. But do it soon before it runs out, the slots run out. The last thing what I want to do say is, let me just see if I can just also pull out that calendar link as well. So it's your calendar link over there. As you can see it on the YouTube and the Zoom link as well. When you look at it, then you can click on the times that you want to get, okay? The other thing what I did want to say also, if you want to meet us in person, I know we usually get some jokes on this, or, you know, Thiru, are you and Gavin really real? Are you an AI clone, right? Which is happening nowadays, right? You're not able to see whether it's real or AI. You can come and see us in person, touch us in flesh, and see whether we are the real thing or not. So that happens in October. This happens once a year, traders. Our annual summit is really amazing, really inspiring as well when everybody comes into the same room. Some of the clients that we've got over the years of doing this, me and Gavin, is just so inspiring even to us, so dedicated, so motivated, so intelligent, and very successful in their own endeavors, whether they are in the job that they do or even as a business owner. Incredible stories that we hear and incredible progress that we have seen as well. So those of you who can make it, it'd be great. It'd be good to see you. Limited spaces in person. Some tickets have already gone already on this. So do take it before it all runs out. This is going to be in Westminster, London, very beautiful part of central London, in the center of London, overlooking the Thames River as well, okay? So read through it. All the links are all there for you guys to look through. The last thing is, I'll just end off with 7 Steps to CTP. If you have not seen it yet, definitely go and take a look at it and go and revisit the material. Any last things you want to add on, Gavin? Or
no, I'm looking forward to the event. I mean, we changed the dates because people in July were going on holiday. So that's the reason they fed back to us. So we've decided to move it to October, which is a perfect time in the UK. The weather's going to be perfect around that time of year. We're at the Park Plaza, which Laura, my wife, and I have stayed at many times, so we know the guys there. And it is literally in the heart of London, so it's a great venue to do that at. And but there is a bit of bad news, Thierry. I am actually AI. I don't. I'll be there
AI will
as
never
a robot.
You got caught up.
Did you see that video on YouTube where they've got the robots playing football in China?
Oh yeah, I've seen so many, Gavin. I've just been mind blown. I just went to a few conferences earlier on this year as well. The thing that AI is growing is mind blowing.
It's that they've got robots now that are going to eventually clean your house for you.
No, it's already out. I think Tesla already released a few of those robots.
Yeah, but they're not. And I bought one of those carpet cleaners, which was automated, and it was rubbish, to be fair. And I threw it out. It bumped into things and it didn't do its job. But now they're getting to the pack. I think in the next 2 years we'll see it. You'll be able to forget these cleaners that come in and clean our house. I've got cleaners that come in and clean the house. They'll be redundant because you have a robot that does not sleep, and it just walks around and it's trained to clean everything. Okay, do the washing up. I'm like, well, it's the future. I mean, you can't. When we talk about trading and we talk about AI, that's something we're studying very closely, as you know. There a lot of the stuff that's moving forward now is artificial intelligence. It's all around us, but it's been around for years. But you know, your ex-medical profession, as I said earlier, it's amazing what they're trying to do now to diagnose something with AI without you even going to a doctor. I mean, that's weird to me, but you know, I'd rather go and sit in front of the doctor and say, I've got a pain in my back, and then they go, oh, well, you've got this. No, you just go to the computer, you type in all your symptoms, it comes up and tells you what you've got. And it's 85% accurate, apparently.
Yeah, it's crazy, isn't it? At the rate at which this is growing. But I can rest assure you guys, we will be real in that.
We are real. Yeah, I'm joking. Yeah, I'm
Yeah,
real.
in the annual summit. One more thing I just remember, Gavin, as well. I mean, lunch will be provided on both days, and there'll be a nice, beautiful, intimate dinner and on the first evening as well. So
Yeah.
we're really looking forward to seeing you guys on the 10th and 11th. Do you've got now enough preparation for flights and all that if you're flying in outside from UK. And it'll be a great finish to the year with good momentum and inspiration as well. So looking forward to seeing you guys on that one. And that's pretty much that for today, traders, on a wrap. As we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master. Take care and bye for now.
Take care. Bye, everyone.